They just warned us, Q2 2023. Buckle up.
I ain't gonna give in now, I think gonna live this now. I'm gonna be man, I'ma kill this stuff real quick. I'ma go take it to town, cause I gotta be that king in the ring when I'm knocking him out when I'm back with the wheel. Cause I am just up on the journey, you just know that I'm just going insane.
Warriors, rise. Grand rising. Good evening, warriors all over the world. I want to start out with an attitude of gratitude and share with you, I love you unconditionally. From my family's heart to yours, I wish you an amazing holiday season. All right, so I have an announcement to make before we kick this off, and then I'll do my intro. So I want to share with you guys, I was invited to be part of a confidential committee linking up with Vahil Capital. We had Jimmy Valet on our channel here, and we are going to be having him back on about 2 to 3 weeks. That's about the deadline. So I am part of a confidential committee. Obviously, I'm remaining non-confidential. Most people are remaining confidential, but I'm very proud to be part of this committee. There's been a lot of rumors about a buyback of XRP. It's not a guarantee of a buyback, but what this confidential committee is, remember he submitted the documents to the Federal Reserve. We are resubmitting the documents to the Federal Reserve to give XRP holders a voice at the table. And I'm proud to say that I'm part of that confidential committee. So we're fighting hard to give you a voice at the table if there is a buyback of XRP. Now, the reason why I am invested in XRP, number one, is I understand the banking system. I'm not telling you to go invest in XRP. I'm not a financial advisor. I'm not paid by XRP. I understand how the banking system works. Our banking system, which I'm going to show you right now, I'm going to show you, they warned us Q2 2023. I've been telling you guys this. The blueprint is out there, family. It's hidden in plain sight. There's nothing to fear. That's what I'm here to tell you. There is no invisible enemy stopping you. This is historical stuff happening over and over again. XRP to me, Ripple, the cryptocurrency space, FTX, Celsius, and all these things happening is all part of a move into a new monetary system. Everybody has their opinions, but you can't deny that we're heading into a new monetary system. What I reported yesterday, and I'll put the video right here, is basically there's 80 trillion hidden in FX swaps, hidden debt, leveraged. That's a black swan, fam. That's a black swan. That is pension funds. That is people's retirement. Think about that. Non-bank financials. This is going to be a little bit of a longer intro. Family, this is history in the making. XRP is much bigger than getting rich for me, family. Cryptocurrency is much bigger than getting rich for me. I'm already rich. I'm already rich here. I've already accomplished the goal. I'll always have money. That's the game. So as you look this way, there's another narrative going on this way. So I promise you guys, within 2 to 3 weeks, I'll have Jimmy Valet back on here, and we will go over the actual document that we're submitting to the Federal Reserve. So I'm part of that committee. We read over the documents. We're going to be meeting, and we're going to support XRP holders in having a voice at the table with the Federal Reserve. Again, this is not against anybody. We're not going after anybody. We're just having a voice at the table. Historical, right? When could the public or citizens really have a voice? This is a historical move that Vahil Capital is doing. So we're going to dive into that. So what I want to share with you guys today, and again, thank you to Vahil Capital for even considering me for that. And I accepted that. Most people are going to be confidential, but I'm very proud to be part of that. And, I stand up tall because I think it's a very classy thing that they're doing. It's very professional. And the potential, it really shows you, you'll see the valuation of XRP and to value in it, like as we value companies, right? You can value companies based on the EBITDA, cash flows. You value as you go into the future, right? And they're backdating it from 2030. You'll see how it works. XRP needs to be expensive to be cheap. It will make sense once we submit this to you. So be careful listening to people and influencers who don't understand how the financial system works, how balance sheets work, how banks actually work. So a lot of people are giving you information, but they don't understand how balance sheets work. They don't understand how the banking system works. So me and my CFO both came from banking. I went to CBA Executive Banking School. Am I an expert? No, but I surround myself with experts. My CFO has a master's in accounting, finance. So we understand how money works, how valuations work. So that's really important as well. So I'll get off my soapbox, but I just wanted to show you this. We talk about the media is under fire right now, right? But I want to show you something really cool. So all of a sudden yesterday, okay, So you can see the dates right here. So you can see them. Well, I kept it. It's from yesterday, but it was weird within hours of each other. So Bloomberg, CNBC, 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 Bloomberg. They had Goldman Sachs, the CEO of Walmart. They had United Airlines, Jamie Dimon, and the CEO of Bank of America, all talking about the future recession. I shared with you guys Q2, Q3, the dollar's going to start to cool down. Inflation will still be high. Interest rates will be high. Okay. And the American public is going to go into a recession. They're saying a mild recession. Some are saying tough recession. But I'll tell you what, they can say that from a banking perspective. They're preparing for this. But when you can't afford gas and you can't afford food and they all have to start laying people off, they're already starting to lay people off. Guess what? It doesn't matter whether it's a mild recession or a tough recession. If you can't pay your bills, you're in a damn recession. So let's just listen to their words. We're going to watch a few clips of the videos, but I want you to see that. Think about it. This is the media sharing with you a narrative. Back to back, Bank of America CEO, JP Morgan, United Airlines, Walmart. They're warning you. Goldman Sachs. They're hiding it in plain sight. It is coming, okay? These are the biggest companies in the world sharing with you the recession is coming. Let's pay attention.
Thank you so much. You know, you've been talking so much now about this idea next year of a mild recession. When you're preparing Bank of America for the year ahead, what does that preparation look like for a mild recession?
Well, the preparation is from the many years of responsible growth.
Now they're using mild recession to not cause a full panic and bank run, in my opinion.
Both how we built the portfolios, how we built the business, what businesses we do, what business we don't do, how we shaped our exposures, how we stress test our exposures on a, every quarter, every month, every week. And so there's not a lot you can do today to change what's going to happen in the next 6 months because we have portfolios that are built over years and years. And so what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully, and really make sure you're shaping your head count the way you want. And we've been working on that. Continue to invest in.
Do you hear what he had? Hear what he said? Manage your expenses, shape your head count, layoffs.
Efficiency and effectiveness, but also continuing to spend money where you have competitive advantage. So we're still hiring new relationship managers in business banking, commercial banking, new financial advisors, private bankers, people in the branches. We invest $600 million more in marketing this year than we did back then because the opportunity is still there. But we've got to be careful about how you do all that and make it work for everybody, including shareholders.
So they're shifting into the wealth business, wealth bankers, right? Because the rich are going to get rich and the poor are going to get poor.
Well, definitely want to talk more about the workforce picture. But before we get to that, more on the economy here. When you think about what could potentially move that mild recession into a deeper recession, what are the specific risk factors that are on the back of your mind?
Well, there's risk factors external to the U.S., things like the escalation of the war in Russia, Ukraine, in a way that people aren't anticipating. In this scenario, people are saying it's going on. It just doesn't get a lot different or worse. A change in around Taiwan, China-U.S. relationships around Taiwan or whatever. Those types of external factors could change it. European consumption is another big consumption pot in the world's being, and free travel to Europe and moving around and stuff helps the world's economy. So that's what you got to worry about. In the United States, we are a consumer-led economy. Consumers spend. The spending by the consumers of Bank of America is up over last year, but the rate of which it is up, it is bigger than it was last year. It's bigger this month than it was in November than it was in October. Bigger in October and September. So it's not stopping or slowing down. It's just growing at less rate. So it grew at 3% during the Thanksgiving to Cyber Monday. It grew 3% over last year. A record amount spent. 5% for the month of November, but year to date it's 11%. So what does that mean? From 11% year to date to 5% in the current month, that means it's slowing down a little bit. So
the reason why it's slowing down, fam, remember, people had their savings stacked. Everybody got shut down for COVID. People's savings accounts got stacked. There was free money. That money is drying up the last 24 months. It is starting to dry up. We're going into consumer. People are just throwing the Hail Mary. Now here we are, Jamie Dimon. This all happened within a couple hours of each other. All the same message, parroting the same message over all the media stations. CNBC kept pushing it out. You're going to see this message. If you look at yesterday, news station after news station, it's like they said, all right, guys, Recession narrative coming. Let's let them know.
There's so much happening right now around the globe. We've been waiting for this conversation. You know what's happening in markets. You know what's happening in the economy. You know what's happening with consumers. What do you see right now? I think everybody was concerned. What was it, 6 months ago when you said a hurricane is coming, you better prepare?
Yeah, so I didn't really say that. But let's just start by saying the United States economy is the strongest economy in the world today. So we should celebrate that a little bit. And that's why capital's coming here, business is coming here, is still growing. If you look in the short run, the consumer is spending 10%.
It's because our dollar is dominating everybody. The capital has to come here. Other countries, rich countries, or wealth in other countries are putting their money into the dollar because its interest rates are so high. It doesn't help the middle class. It helps Jamie Dimon in his mansion.
% more than last year and 40% more than pre-COVID. They're spending it in different things. So all you speakers up here, some are doing better, some are doing worse. That's a tremendous sum of money, and they have $1.5 trillion still in their checking accounts, more than pre-COVID. So the spending is down. That's the good news. And the companies are in good shape too, by the way, and their balance sheet, consumer balance sheet is in great shape. The other news, which is not good, is that rates are now 4% on their way to 5%. Inflation is eroding everything I just said. And that $1.5 trillion will run out sometime mid-year next year.
Boom, right there. So he told you they're talking about consumer spending and stuff, guys, but the interest rates are eroding that, right? So they share with you over here, just like he said, crypto's a fraud, but blockchain, we like blockchain.
And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about. But far more important than that, by the way, is all the geopolitical stuff.
It's a big decision. Okay, geopolitical, it's all by design, the war, supply chain, okay? Now here's now his is kind of boring, but I just wanted to show you United Airlines CEO, no offense, Scott, but we expect mild recession, but travel is setting records, okay? Then we go in here, there's some other, and then we got Walmart CEO. Let's listen to what he has to say.
I think people forget about the size and scope of Walmart. We were just talking before we came. I was thinking that it was 2.1 million employees. It's closer to 2.3 million employees, which makes Walmart, as it has been for a very long time, the largest employer in this country outside of the federal government. You've got 12% of all retail sales in the United States coming through Walmart. And that means you are probably the very best person we can talk to, A, about jobs and what's happening, and B, about what's happening with the consumer. So which one do you want to start with?
Let's start with the customer.
Okay. How are things going?
Pretty much as we said at the end of the third quarter, they're still stressed. I mean, we serve everybody. Americans come to Walmart. We've got some customers who are more budget conscious that have been under inflation pressure now for months. It really started changing in March, April of this year. And that sustained pressure in some categories, I think, is something that customers are having to deal with as we approach Christmas.
You also have, though, a growing number of customers who make over $100,000. I think that's where a lot of the growth is coming.
Yeah, a lot of our growth the last couple of quarters has come from people that are coming to Walmart to save money. Our purpose is to save people money and help.
Okay, so this is important. They say that the person, reports have said that people making $150,000 a year are now living paycheck to paycheck. He confirms that they're now moving their spending from maybe a Target down to a Walmart, a Macy's down to a Walmart. That's probably a big switch, but
them live better. And as we focused on Thanksgiving and the events around Thanksgiving, whether it's food or in the general merchandise categories, we're doing our very best to keep prices low for everyone, and customers are seeing that value.
That's a huge issue. Inflation has been such a bear. It has kind of eaten its way into everything that the consumer is trying to spend money on. How do you do that? Because there are stories about you guys really pushing hard on suppliers. What do you do? How do you contain inflation?
It's probably helpful to break that down back into different categories. Fresh food is more volatile. It fluctuates more. So today's beef prices are down. Chicken prices are still high, for example. Produce prices are relatively low relative to what they were before. Dry grocery, processed foods and consumables are where the inflation's most stubborn. Double-digit inflation rates have been around for a while, and it looks to us like they're going to be with us for a while. And so that's a primary area of focus for us, trying to come up with creative ways with our suppliers to get prices down. Customers choose private brands in those environments more often, for example. And then there's general merchandise. And in toys, sporting goods, apparel, categories like that, prices have come down more aggressively. We're still inflated, but we're not inflated nearly as much as we are in the other categories. So
okay, so this is a domino effect. So think about this. People who are making $100,000, so you have to understand the domino, are changing their habits. They're moving from certain stores to another. That means the store that they're moving from has to lay people off. There's a domino effect coming, family. Okay, so this is Goldman Sachs, and I wanted to show you this video, and this is going to be a longer video, so just bear with me.
You're entering your 5th year as CEO. You're in such a different place than you were even 6 months ago. Your stock is actually holding up better than every single one of your rivals. But the reality, too, is here that everyone is preparing for what could be a mild or even deeper recession. As the CEO of Goldman Sachs,
So why do they keep using this mild? They're telling them to use the word mild because they don't want you to be fully prepared for what's coming. They don't want to panic the public.
how do you prepare your bank for that?
Well, first of all, thank you for having me, and I'm delighted to be here with you.
And I'm going to share with you how they're going to prepare their bank. I'm going to show you.
I appreciate your being at our financial services conference. This is the 33rd year. We've got a terrific group of clients here, and it's a great time to kind of reflect on our industry and really look at our industry going forward. I think you framed it just correctly. We're at a very uncertain time, given we're changing monetary and economic conditions very, very quickly. And that's certainly having an impact of slowing down economic activity. And so if you're running a big financial services firm, I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization. I think you have to expect that activity levels are going to be more constrained in a tougher economic environment. So we have businesses that are very, very correlated to economic growth in the world, and we're predicting economic growth will slow. Our economists predict 1.9% economic growth around the world in 2023, which is obviously slowing growth. And the big question is, as central banks tighten monetary conditions and try to control inflation, can they do that and orchestrate some sort of a soft landing? And I think that's still uncertain. I think there's a possibility of that, but I certainly think we could see a recession in 2023 also. And so I think you've got to be cautious and prepare.
How then do you prepare your staff around all of this? It's December, it's the end of the year. People are worried about jobs. People are thinking about jobs. They're thinking about pay as well. It's bonus season coming up. We've reported that you are even thinking about having lower bonuses at businesses that will have rising revenue this year. How are you thinking about this? Bring us inside your decision-making process and what you're telling your staff right now.
Well, we operate a business where every single year we have to pay our most important asset, which is our people. It shouldn't be surprising to people watching the performance of the business this year that 2021 was an exceptional year. It was a record year for the firm. It was the highest net revenue year ever for the firm. 2022.
And why? Printing of money, free money.
Was a different year. And so naturally, compensation will be lower. We're still early in the process of making those decisions, but just like every year, we pay for performance, and we will pay people based on the overall performance of the firm, and especially for our...
Okay, so he goes into blockchain as well. Well, the reason why he goes into blockchain, because Goldman Sachs on hunt for bargain crypto firms after FTX fiasco. Fam, I told you, they are going to monopolize the market. You got JPM, who already has Onyx, their own cryptocurrency, their own crypto system, their own blockchain. We got Goldman Sachs back in the past here. XRP classified a digital currency by Goldman Sachs. Wells Fargo, HSBC, Bank of America uses Ripple in their patent. Crypto startup Ripple is seeking a license in Ireland to drive EU expansion. That was on November 18th, okay? At the same time, fam, we were all focused. People were all focused on this FTX collapse. I believe that was all by design. I believe it was all by design. They waited till all these exchanges got leverage to prove that there is no protection for consumers. You got the Ripple SEC case that's going on way too long. It doesn't make any sense for it going on this long. I have video after video explaining that we're all being played. Okay, we're all being played. So if you understand the game, you can't be played. So as you look this way, there's another narrative going on this way. That's why I'm not a Bitcoin maximus, an XRP maximus. I just understand XRP. It's just like somebody who's a vegan. They always talk about being a vegan or CrossFit. I understand XRP. I understand banking. It makes sense to me. I understand we're in a massive liquidity crisis, okay? So I focus on utility tokens in my portfolio, things like XRP, XLM. Ethereum is a big part. Well, Ethereum, I got liquidated, but I'm back on track again. I'm building up my Ethereum portfolio, VeChain. If you heard my story around Nexo, all that stuff when the market collapsed, don't be over leveraged. See, I learned my lesson, but I teach you guys the things that I'm doing. So I love you guys. I appreciate you. I'm trying to keep this under 20 minutes. Again, we'll have Jimmy Valet on here from Vallejo Capital. Again, proud to be part of that committee. And we're doing things for the people. You know, we're not out to fight against anybody. We're not going after anybody. We're looking for your head and your heart to bring you back into that higher consciousness. Love you guys. Warriors! Let's get your shit together. Let's go.